Well, welcome to HPK Provident Advisors Friday Live. This is Friday, September 5th, 2025. I know that because it's right under my name. I'm Brian Peluso. That's Michael Kutch. We are partners in HPK Provident Advisors. And every Friday, 12:30 p.m. Eastern Standard Time, we get on Facebook. Talk a little bit about the markets, talk a little bit about financial planning. You either get me or Mike, or me and Mike, sometimes David Harper as well, who's the other partner. So let's get right into it. We got some big news in the market today, September 5th. But Mike, let's talk a little bit. Well, it's Jobs Day, but let's talk a little bit about your weekend.
My favorite Friday of the month.
Wow. But before we get into these details, bachelor party this weekend. Mike's getting married in October. So what are the plans? Where are we off to? What's the story?
Yeah, we're going to Volano Beach, which is about 25 minutes south of me. I'm in Ponte Vedra Beach. It's real close to downtown St. Augustine. So we got a house that's a couple houses from the beach. So the plan is get some sun, get some surfing,
nice.
Maybe a nice steak. We'll probably go downtown St. Augustine one night. But I think I have 5 friends coming, so it should be fun. And
That's
then
perfect.
A few of them, I think about half of them aren't coming to the wedding. So it's nice that I'll get to see everyone.
Right.
I haven't seen some of them in a long time. So I'm looking forward to it.
That's the way it goes. Everybody gets busy. Well, you guys have a great time. And that'll give you an opportunity to maybe not think about the jobs report we had this morning. So, yeah, why don't you talk about that a little bit?
Yeah, it wasn't great. And this follows the last one, which was very weak. So to preference that, I guess I'll go with the revisions. So the headline number, 22,000 jobs were added, very weak. I think expectations were for 78,000. Last month was actually revised up a couple thousand from 74 to 77. So that's a positive. However, June was revised lower. It was 14,000, ended up coming in at negative 13,000. So now the 3-month average went from 36,000 to about 29,000. So that negative print for June is the lowest reading since 2020. So a little alarming. Unemployment rate ticked up to 4.3%. And on a positive note, wage growth is good. 0.3% in line with expectations. 3.7, I believe, on an annualized basis. So still very healthy. So what this is showing is hiring is definitely slowing almost to a halt. But layoffs aren't really increasing yet. So not going in the right direction, but not that alarming yet, but definitely cause for some concern. So initially the market rallied. We're going to get cuts in, 12 days from now. But then it came to their senses and said, we're a little worried about the job situation right now. So we'll see how we finish up. I wouldn't be surprised if it's a big down day, but we are off at the lows right now. So we'll just have to see how it plays out throughout the day. We got some other good economic data this week. First to stay on the jobs picture, job openings were lower than expected, in the low 7 million range. So not great. ISM manufacturing did come in below estimates, but that is higher than the previous month. So that's like 48.5. So getting closer to that expansionary territory, but still on the weaker side. And then ISM services was really strong, came in well above expectations, and got away from that. What am I trying to say? Get away from the contractionary level. I think it was like 52.5. So very strong. So we'll just have to see how this day plays out. It's looking like it should end up pretty red. But if you have fixed income in your portfolios, that's doing very well today. The 10 years at about 4.08. So at least that's in the green today. So something to keep an eye in. Next week, we'll have the inflation data, CPI on Wednesday, CPI on Thursday, PPI on Wednesday. So that'll be a big factor in the Fed's next decision. Hopefully we're not seeing higher inflation and lower growth. That's a difficult situation for them when both mandates are going opposite directions.
All right. So we'll have CPI, consumer, PPI, producer. So we'll kind of get both sides of the economy, the consumer side, the manufacturer side, if you will, producers. So that'll be certainly interesting. Mike, you bring up a great point. Now, you'll have some of this on your blog. You know, pretty much each day you're going to find content on social media from us. Mike does the week ahead every Monday. So you'll probably have some of this commentary on Monday, I would think. And then we've got some other planning topics, but, you know, keep an eye on the social media, because a lot of these things we're kind of summarizing some of the longer content that we have. So if there's something that piques your interest, take a look at those posts. Go ahead, Mike. Let's take a look at what you got.
Yeah. So this is just the chart of the S&P 500. As you can see, we opened at an all-time high today, but then quickly gave it back. The RSI is continuing to trend lower, so definitely losing some momentum. I'll just flash the 10-year real quick and the 2-year. Let's see, we'll do 2-year first, down 12 basis points. We're at the lowest level since April 2025, and I think the 10 years hit the lowest level since April as well, so 4.07 about. So that's definitely reflecting the growth scare right now.
Right.
But maybe if it continues lower, we'll get a little bump from housing finally.
Well, you know, your observations here between, you know, the stock side and the bond side are important in the sense that this is what allocation is about. You know, over the last few years, we've heard on occasion folks say, why do I have these bonds? This is why.
Yeah, when growth becomes a real factor, a real concern, fixed income tends to do very well.
Yeah. So very oftentimes, if appropriate for this specific situation, we are mixing the stocks and the bonds. And there can be times where you say, oh, the bonds are boring. They're not really doing much, or the stocks aren't doing great. But if you have that balance, you know, you have things that are doing well when other things aren't doing well, and that vice versa. You know, that is kind of the epitome.
Yeah,
and it's most basic.
After a year like 2022, where just everything went down, it really gave people a lot of uncertainty. Whether like why do we have fixed income?
Right. Why do we diversify? Well, 2022 was a super unique year. I don't think there had been a year like that. If I remember the number, don't quote me on this. It was the early 70s. We hadn't had a year where so many things just went down simultaneously. And then that brings up the question, well, does diversification work? Everything went in the same direction. Our opinion, our approach is that it does. And, you know, a very tiny observation for sure, but in a day like today, we still think diversification works. All right, let's talk about some of the other posts that we had out there. So we had a shortened week. Of course, Monday was Labor Day. On Wednesday, we had a quick post, and it's just a calculator with the new, the OB3. All right, this is the one big, beautiful bill. We'll talk about that in a couple other capacities. But there's a quick calculator out there if you want to get a guesstimate as to what your tax bracket will be with some of these changes. We put that out there on, that was on Wednesday. Thursday, we had a really interesting one on OB3 as well. Every Thursday, by the way, for the next couple of weeks, continuing, we're going to put up snippets on this one big, beautiful bill. And this was an important one. I'm going to go ahead and bring up the IRS website, if I might. So this is the IRS website. See, that's the one big, beautiful bill. I call it OB3. I hope it sticks. Mm-hmm. These are the deductions on, of course, you heard about no tax on tips, no tax on overtime. You also probably heard no tax on Social Security. And that, in my opinion, is mislabeled. Because the way that was presented, if you said no tax on tips, no tax on overtime, no tax on Social Security, that sounds like it's an exclusion. I can exclude tips. I can exclude overtime. I can exclude. It's not true. These are not exclusions. What they did was they built in deductions. Now, we had talked about the Social Security. There's still tax on Social Security, but they added an additional deduction for the folks over the age of 65 of $6,000. And the no tax on tips and the no tax on overtime is very similar. So we're going to look at it right here. and it is the maximum annual deduction on tips of $25,000. So it's not an exclusion. You don't exclude tips. You still have to report them, but you get an additional deduction. There is a phase out on this, and it's right here. And again, this is just irs.com. So there is an exclusion, which means when you have a certain level of adjusted gross income, you don't get this full deduction. And for single filers at the 150,000, and then it starts to phase out. That 25,000 gets less and less that you can deduct. Now, of course, I should tell you at this point, and I will tell you on many, that we don't give tax or legal advice. These are observations. This is right off the IRS website. This is not something that you need to start filling out your taxes right now and say, Brian and Mike said this, because we don't give tax or legal advice. But this is just kind of a informational only. And we'll get a lot more of that at the end. It's a really exciting part when we do our disclosures. Now, let's talk about the no tax on overtime. Once again, this is not an exclusion. You still need to report it, but you do get a deduction. And the deduction is right in here. Maximum deduction for a single filer is $12,500, $25,000 for married filing jointly. And it also has this phase out, starting at $150,000 for single, $300,000 for joint. The important part of all of this, no tax on Social Security, no tax on tips, no tax on overtime, is not an exclusion from reporting these things on your taxes. But what they did was they built in very, very, very helpful deductions. So there's some more details on that on our web post. Take a look at that. And like I said, I was referencing directly from irs.com. And as I mentioned, every Thursday, next Thursday is the 20% deduction for qualified businesses. So that'll be next Thursday on our ongoing series of OB3. Mike's going to have the week ahead on Monday. And so hopefully you get back in plenty of time, and the surfing was good and the steak was awesome to get back in time to get that out on social media.
Yep, I already got it lined up. So that'll be out on Monday.
Well, that is fantastic. Well, I think that's what we've got for today. It was actually, a fairly information-rich week, especially because of the jobs report today, and there's always things changing. So that's what makes our job super interesting. That's why we love doing what we're doing. I will tell you, if you want to see some of these things, you can go to hpkprovident.com. That's our website. If you go over in the main page, you go to resources and go to our blog, you get a lot of details in there as well for those folks who prefer to read as opposed to watch us. You can always call us as well. There's our phone number, 724-463-1331. Mike had mentioned he's in Florida. I'm in the Pittsburgh area. That phone number rings to all of us. So if you want to reach Mike, he does the portfolio management for us here. That's why he has all the great charts and whatnot. So that number is evergreen in the sense that it reaches everybody in the firm, whether they're up north or down in Florida area. Also on our website, you can contact us directly there. You can just send us an email if you prefer. It's in the upper right-hand side. It just says contact us. That's what I got. Mike, I hope you have a wonderful weekend. It's going to be great catching up with your friends.
Thank you.
And, the last vestiges of freedom, I guess. That's not true. I've been married for 26 years. As of next week, it'll be 26 years, and it is glorious bliss, and I love every day of it. Anyway, that's what we got. Any other thoughts, questions, hopes, feelings, concerns, Mike?
I was just going to mention, if you're approaching retirement, we do have a webinar on September 24th. So you can register on our website, Facebook, LinkedIn, just hpkprovident.com.
We're going to really tear into Social Security, and it's going to be comprehensive, but quick and right to it. It's going to be the things that we have seen in doing the financial planning. We really like to focus on the financial planning, let that lead our relationship with folks, and let the financial planning lead kind of our thoughts and suggestions for people. And so we're going to highlight the things that we've seen in financial planning that are most pertinent. Of course, I could do a series on, I think the Social Security manual. It's called POMS. That's what the Social Security folks read. That's their rule book. 2,800 rules. We'll cover maybe 1,900 of them. Let's go half now. It's going to be the quick. It's going to be the quick things that people really want to know, the questions we get most often, and we're going to answer them during that webinar. So that is Wednesday.
And there should be a replay of it if you can't make it or just need to review it afterwards. It's going to be a lot of information. And then Brian plans to do something related, whether it's Social Security or financial planning, probably on a monthly basis we're looking at. Yeah. So just keep an eye out for those event registrations and get signed up.
We will try to make them as informational and entertaining as possible. All right, Mike. Well, you have a wonderful weekend. Thanks, everybody, for tuning in. Again, we will be back next Friday, which is September 12th, 2025. That'll be at 12:30 p.m. Eastern Standard Time on Facebook. Everybody have a wonderful weekend and be safe.